Mayor Amschel Rothschild, whose descendants still to this day are primary shareholders in the privately owned Federal Reserve, is quoted as saying, "Permit me to issue and control the money of a nation, and I care not who makes its laws." And as millions of Americans struggle to get by wondering why bills always go up, let me clue you in why that's the case. The Crypto Fear and Greed Index is up just a smidgen, and yes, that's a real word that we use out here in the country. Don't Google it, don't look it up, just take my word for it. Since setting the yearly low on November 21st, 2025 at 10. The MMRI is down just slightly to 248, still in the range of high risk, dropping from the 250 range that we've been seeing for approximately about the last week. We are starting to see a couple cryptos jump into the green here, with one of the ISO coins, Quant, being one of them, up plus 6.9%. With the week basically being deep in the red, with Rain still up 122%, with XDC, another ISO coin, up 10.2%. But looking at the month, it's very interesting. We see Rain up 147%, Telcoin up plus 28.6%, ICP up 29.8%, ZEC still up 38.2%. But another very interesting thing is when we look at the top 1,000 category by market cap, we can see that the 601 to 700 category has outperformed the rest by far, only being down negative 3.4% compared to every other category being up to a minimum of at least minus 15%. And if you've been sitting on the sidelines wondering what it's like to hold crypto, here's a brief synopsis. And never forget that nowhere does it say that the Federal Reserve shall have the power to create money out of thin air. Yet they still exist. And as always, this is not financial advice and is nothing less than the rantings and ravings of a man who in his teenage years was working his heart out, practicing to win the gold medal in biggest bong rip of all time. And today we're going to jump over and take a look at the XRP charts. There's quite a few interesting things to be seen spread out on quite a few different charts, so let's get into it. And if you could do me a favor and hit the like button before we get started, I would really appreciate it. First off, jumping over and taking a look at my Elliott Wave chart. This is on the daily chart. We can see that the current price action is trading right in this area right here. XRP traded back down here with a 5-wave move to the upside, setting the wave 1, a 3-wave move to the downside, setting the wave 2, moving into the Trump pump, which was a 5-wave move to the upside, setting the wave 3 termination, moving into the wave 4 that we are currently trading within, which is an A, B, C flat correction. Looking at the Elliott Wave rules, we can see that on the wave 4, it often retraces 38.2% of the wave 3 and rarely moves more than 50%, and definitely should not overlap the wave 1 impulse, as this would invalidate it. And by using these fib levels right here, going off of the wave 3 low and the wave 3 high, we can see that during the flash crash, this liquidation candle dipped down below the 0.382% fib and just above the 0.5 fib. When looking at this pattern overall, we can see that this ABC consists of a 3-wave move down, a 3-wave move up, and a 5-wave move to the downside, fitting the ABC flat pattern. Now this wave 4 termination remains to be seen. It very well could be sitting right here in this particular area. I just have it pulled down to this area here as I'm waiting to see how this unfolds, which in this case would mean that we're seeing a truncated fifth. And as you can see, the wave 3 came down incredibly low compared to that truncated fifth. And we can also see right here that in Elliott Wave theory, if you have a completed 5-wave impulse, wave 5 is expected to exceed the high or low of the wave 3. If the wave 5 fails to do so, meaning that it ends short of the wave 3 extreme, this is called a truncated fifth. Key points about a truncated fifth. It usually happens after the extreme of a strong wave 3 where the market is exhausted. It's a warning sign of a trend reversal of a major correction. And when we look here at the chart at the wave 3, that is exactly what we see. Now that certainly does not mean that this cannot come down lower, because this wave 4 termination by all means could come down here to the 0.5 fib, sweeping the wave 3 and clearing out the remaining liquidity resting in this area. But no matter how you chop this up, even if the wave 4 termination is here, whether it's here with the truncated fifth, the fifth wave of this 5-wave impulse remains. And if you would like to support my channel, the best way to do that is by joining my Patreon. There's 3 paid member levels, but you can also join for free if that better suits you. Another way is to sign up for BitUnix. It's the only place that I trade crypto, and it's where I swap all of my cryptos. And signing up helps the channel as well. Now jumping over and taking a look at the XRP monthly chart. I have talked about this previously, with this bullish fair value gap extending all the way through the current price action. In the last video, this monthly candle was pushing down well below that particular fair value gap. And as I talked about previously, it has wicked through this multiple times. But as I said then, it's not the wicks that do the damage, but it's the body itself. We can now see that that body retracted back up and above this bullish fair value gap, which if we dial in just a little bit further, remains without a single candle body closing within it, which is absolutely bullish. The flash crash candle wicked all the way down here to the 1.702 fib. This candle wicked down to the 0.702 fib retracement level and is still holding. This is another bullish sign. Now jumping over to the weekly chart and talking about something I have also covered in previous videos. XRP price is exhibiting a bullish hidden divergence on the weekly chart, coming to this point right here, matching perfectly on the CCI indicator coming down to this point. We have now started to form a second bullish hidden divergence right here, which we can also see on the indicator. This means that there are 2 bullish hidden divergences, both coming up to this point right here, pushing down to this previous low. We can see that the candle bodies are resting just within that bullish fair value gap that I just outlined on the monthly as it carries over to the weekly. We can see that there's been 2 previous times when this occurred. The first time it occurred right here with the candle bodies closing through and below it before seeing a reversal. It then came back down to this area and did something very similar to what we're currently seeing right now, before breaking out and setting the all-time high. We can see coming down here on the indicator that the blue line was below the yellow line, and once the blue line crossed into the yellow, that's when we saw the biggest move to the upside. If we look down here at the indicator right now, we can see that the blue line is resting below the white horizontal line as well as below the yellow line, which means in the coming weeks, we could see this blue line cross over the yellow line, giving us yet another bullish move. But as we can see here by looking at the bullish divergences where they meet on the indicator, price is starting to move in an upward trajectory. We want to see this blue line first cross above this white horizontal line just as we did here, which will likely be coming sooner than you think. Then we want to see it cross up and above the yellow line. Keep in mind this is the weekly chart and it could take some time for this to unfold, and it's certainly not guaranteed to unfold in a bullish fashion. But when we look back on this previous channel that we saw right here, price broke below this lower trend line, pushing down to the 1.702 fib right here before reversing to the upside, which happens to be the starting point for this bullish hidden divergence. This liquidation candle came down here, bouncing off of the 1.702 fib perfectly before retracing upwards. This fib retracement level here, which comes off of this point here and this low from the flash crash candle wick bottom, it too came perfectly down to the 0.702 fib, just like we'd seen on these previous 2 occasions. And it certainly doesn't take a genius to see the correlations between these 2 particular patterns. There was a flash crash candle wick breaking through here. Price eventually broke below the lower trend line, hitting the 1.702 fib and moving to the upside. We've seen the same thing here with the flash crash wick breaking below the channel's lower trend line, hitting the 1.702 fib before retracing to later break below right here in the same fashion that we saw right here, coming down to the 0.702 fib retracement level. Price is now trading up and back inside of that channel, just as we saw in this area here. So even though a lot of people are losing hope in XRP and the crypto market as a whole, the more bearish they become, the more bullish I become. And I'm fully expecting that if this breakout does come to fruition and price does move to the upside, working on this wave 5 right here, moving up into these fib levels, resting in that $6 to $7 range, which would be absolutely incredible, I fully expect that the vast majority of the market is going to be extremely bearish. This move will hit when the absolute majority has completely flipped the script and is calling crypto the biggest scam in history, XRP the worst investment of all time, and all that typical jargon that we normally hear during those bearish times. That is when you know that the big move is about to happen. And I don't know about you, but I am fully set up, completely prepared for it. And unlike most retail investors, I also have the patience required to be there when this moment occurs. So good luck and have a great day.